What's going on, guys, and welcome to today's YouTube video. In today's video we are going to discuss the current state of Bitcoin. We are going to look at a potential trade setup that is actually currently being developed on the Bitcoin price and that we could potentially take today. After Bitcoin, we are also going to discuss a potential trading scenario that I'm looking at for Ethereum. Both of the charts are looking very interesting, and we definitely have lots and lots to discuss in today's video. So definitely make sure to check it out if you want to see what kind of long setup we are potentially looking at today. Let's dive straight into it, because we can see after this move to the upside, Bitcoin started ranging. Now, why did I already know beforehand that Bitcoin would start ranging after we put in this high and we put in this low over here? You can check my Twitter, and I told you guys we would enter a choppy range. That is because of the Elliott wave count. Because if we are going to count the current Elliott wave, we can see that we have our first wave. Let's take a little bit of the higher time frame. So we have our first wave over here, wave 2, wave 3 is completed. We are currently forming wave 4 before we are getting the final impulse to the upside. Now, if we take the sub wave count, we can see that the third wave and also the first wave over here, 1, 2, 3, 4, 5, something like this. Anyways, we are currently in our fourth wave. And very common for a fourth wave is that you start moving very slow, is that you start moving sideways, that you start moving in triangles, in channels and stuff like that. The fourth wave is designed to chop up and wreck as many traders as possible, to frustrate as many traders as possible before getting that final impulse to the upside. The fourth wave is the wave where most people that made gains over here are giving up on their gains because they constantly feel the urge to get the dopamine kick again that they received from making money during this move. But also on top of that, the people that weren't in a position during this pump, or even worse, that were shorting this pump to the upside, they want to earn back the money that they lost, so they feel an even bigger urge to be in a position. Now, if we track back the previous price section, we can see over here, we saw a fake breakdown. Now, what happens on this fake breakdown? People that want to get into a position eagerly short over here or short to pullback. Where do we think that they have their stop loss? They have their stop loss above this high. They got wrecked. Now, this is where we see a fake breakout, a fake break of structure to the upside. People that eagerly want to be in a position open up longs or open up longs on the pullback. Where do we think they have their stops? Beneath this low. Let me do this once again. Beneath this low over here, or beneath this small low over here. Now, this is where it gets interesting, because this is where we see something interesting, right? The price starts a local downtrend, forming lower highs and lower lows. This high pushed the price towards this liquidity pool that we had beneath these lows over here. This liquidity pool only existed because of this fake breakout. Now, this is where demand comes into the market. This is where the price bounces upwards. And this is where we form a valid break of structure. Why? Because we break through this high that brought us to this new low over here. So not only the high time frame trend is still strongly to the upside, but also the low time frame trend has shifted over here. Now, we have a very clean range currently on Bitcoin, and we can see once again many people over here constantly feeling the urge to get into a position. We can see sweeps at the top over here. We can see sweeps at the bottom. People that eagerly want to be in the position around the mid-range are getting wrecked. Now, we have shifted the trend to the upside over here. Currently, we are moving sideways. Potentially, what we could be forming is that we are creating a beautiful liquidity pool over here because of this sideways movement, right? So people that are opening up longs over here, putting their stops either beneath this low or beneath this low, so creating a huge liquidity pool. We are potentially creating a PO3 AMD pattern in which we have our accumulation range over here. We could wait for the manipulation range over here to form before potential distribution to the upside. Potential bullish PO3, another confluence. Now, beneath this liquidity over here and over here, we have a bullish order block, which is this order block over here, as we can see. Now, why is this a high probability order block? There's 3 different things that an order block needs to check in order to be high probability. While the order block is being formed, it needs to sweep sell side liquidity if it is a bullish order block and buy side liquidity if it is a bearish order block. We can see beautiful sweep of this liquidity pool over here when the order block was formed. First check mark is checked. Afterwards, we can see that we form a bullish fair value gap on the same time frame over here, right above the order block. You need to have a bullish getaway fair value gap, a bullish breakout fair value gap above the order block in order for the order block to be high probability. We have that. Another check checked. Now, the third one is that we need to have an inducement, a valid liquidity pool where smart money can fill their orders. And that is also what we are seeing over here. The third one also getting checked. So this is a high probability order block. This high probability order block aligns with the quarterly level of this range. And look how the quarterly levels have been respected in the past in this range for Bitcoin, right? Beautiful respect of the quarterly levels. So definitely another nice confluence. So what am I looking at? I'm looking for a sweep of this low into the quarterly of the range, into this bullish order block. And this is where we could see a reversal to the upside, to the liquidity pool above the range high that is unswept, right? The only thing that worries me is that we also have an unswept liquidity pool beneath the range low. But because everyone is targeting the liquidity pool beneath the range low, I think we might actually maybe front run it, find support over here and bounce it to the range high liquidity and potentially even higher. This is my trading idea for Bitcoin. Now, the potential setup that I'm looking at is looking something like this. But the exact setup obviously is only shared in our VIP channel, but the confluences are there, the analysis is there, the setup is there. Now let's continue with the next one, which is Ethereum. We are still positioned beautifully long with the sniper entry over here, and we still have our stop loss at break even. But now there will be a potential opportunity where we can add a brand new long position on Ethereum. We can add to our current position, or if you aren't positioned yet, you can add a brand new position. Now, what is that scenario looking like? If we analyze this chart on Ethereum, once again, guys, look at the beauty of this chart. This is what I call, I'm not going to say the name, but this is absolutely stunning range trading. You can see the respect of the range high and the range low, but look at the respect of the quarterly levels of the range over here and the quarterly level of the range over here. This is absolutely stunning. Now, above these equal highs and below these equal lows, we have liquidity buildup. So the scenario that I'm looking to trade on Ethereum is the scenario where we are going to get a push beneath this sell side liquidity over here, in which we are also going to push beneath this quarterly level. I'm looking for a push beneath it. I'm looking for a lower high to be formed. I'm looking for a lower low to be formed, in which we see a local bullish sweep. If we then manage to shift structure over here and in confluence with that shifted structure to the upside, we also reclaim this quarterly level over here. This is where you can enter a brand new long position of Ethereum with your stop loss beneath this low, and your first target could be the range high, second target could be $1,929. This offers a nice RR and high probability trade. So what I would advise for you to do is set your alerts beneath these lows. After these lows get taken out, wait for the price action to be formed. If it reclaims the quarterly level in confluence with a bullish shift in structure, that's your long trigger. That's where you engage with the trade. If you don't get that bullish shift in structure, if it doesn't reclaim this quarterly level of the range, there's not a reason to get into a long position. And in that way, you will patiently wait for the next opportunity to present itself. It's our job to let the trades come to us. It's our job to only take the highest probability setups out there. We don't want to chase the trades. We want to attract the trades to ourselves. If you guys do have any questions after watching today's episode, let me know in the comments down below. Also, make sure to check out Prime XBT, where you can trade both Bitcoin, Ethereum, and all of the Forex and indices. They are now also offering 8 different crypto future pairs, and they are sponsoring today's video. If you guys have any questions after watching this video, let me know in the comments down below, and I'll catch you guys on Friday's video. Ciao, ciao!